carry forward and set off accumulated loss and unabsorbed depreciation in case of amalgamation. Section 72A is applicable on the following amalgamation where there has been an amalgamation of a company owning an industrial undertaking or a ship or a hotel with another company, or there has been an amalgamation of a banking company with a specified bank, or there has been an amalgamation of one or more public sector company or companies engaged in the business of operation of aircraft with one of the or more public company or companies engaged in similar. Here, industrial undertaking means as undertaking engaged in manufacturing or processing of goods or manufacture of computer software or business of generation or distribution of electricity or any other form of power or business of providing telecommunication services whether basic or cellular including radio paging domestic satellite service network of trunking broadband network and internet services or mining or the construction of ships aircrafts or rail systems. Conditions of the amalgamation. The amalgamating company has been engaged in the business for 3 or more years. The amalgamating company has held continuously as on the date of amalgamation at least three-fourths of the book value of fixed assets held by it 2 years prior to the date of amalgamation. Conditions for carry forward and set off accumulative loss and unabsorbed depreciation allowable in case of amalgamation are first, the amalgamated company owns the industrial undertaking of the amalgamating company. Second, the amalgamated company achieves the level of production at least 50% of the installed capacity. Third, account must be verified by an accountant and a certificate in Form 62 shall be furnished along with the return of income. This type of accumulated loss of amalgamated company can be carried forward for further 8 years. Now, moving further, carry forward and set off of accumulated loss and unabsorbed depreciation in case of demerger. Now, if any sort of demerger happens, then in such case, treatment of and set of accumulated loss will be defined in this slide as mentioned. Two cases are there and their treatments are also mentioned in the first case where such loss depreciation is directly related to undertakings transferred to the resulting, then such loss shall be allowed to carry forward and set off in hands of resulting company. Where in second case where such loss or unobserved depreciation is not directly related to the undertakings transferred to the resulting company. Such loss shall be apportioned between the demerged company and the resulting company in the same proportion in which the assets of the undertaking have been retained by demerged company and transferred to the resulting company. Amount to be carried forward is calculated as loss of undertaking multiply asset taking over by resulting company divided by total asset of the undertaking. Section 72, subsection 5. The central government may, for the purpose of this act, by notification in the official gazette, specify such condition as it considers necessary to ensure that the demerger is for genuine business purpose. Then only carry forward and set off of losses is possible. Next, carry forward and set off of losses on conversion of proprietary concern or partnership firm into company. When a partnership firm or proprietary concern is transferred or converted into company, then the treatment of set off and carry forward of losses is as based on the conditions where a firm is succeeded by a company fulfilling the conditions laid down in section 47 or a proprietary concern is succeeded by a company fulfilling conditions laid down in Section 47. The accumulated loss and unabsorbed depreciation of the predecessor firm or the proprietary concern, as the case may be, shall be deemed to be the loss or allowance for depreciation of the successor company for the purpose of previous year in which reorganization of business was effected. Accumulated loss of such firm or concern can be carried forward for further 8 years. Now, carry forward and set off of losses on conversion into limited liability partnership condition where a private company or unlisted company is succeeded by a limited liability partnership fulfilling the conditions laid down in the proviso to Section 47. The accumulated loss and unabsorbed depreciation of the predecessor concern shall be deemed to be the loss or allowance for depreciation of the successor firm for the purpose of previous year in which reorganization of business was affected. Accumulated loss of such firm or concern can be carried forward for further 8 years. If any of the conditions laid down in Section 47 are not complied with, the set-off of loss or allowance or depreciation made in any previous year by the successor firm shall be deemed to be the income of the firm and chargeable to tax in the year in which such conditions are violated. Next, carry forward and set off of accumulated loss in a scheme of amalgamation of banking company or general insurance company. Situation in case of amalgamation of one or more banking company. Second case, one or more corresponding new bank or banks with any other corresponding new bank. Third, one or more government company or companies with any other government company under a scheme sanctioned. So, the treatment for such is the accumulated loss and the unabsorbed depreciation of amalgamating concern shall be deemed to be the loss of amalgamated concern for the previous year in which the scheme of amalgamation was brought into force. Here, unabsorbed depreciation means so much of allowance for depreciation of the amalgamating company which remains to be allowed and which would have been allowed to such company if amalgamation had not taken place. Accumulated loss means so much of loss under the head profit and gains of business or profession which such amalgamating company would have been entitled to carry forward and set off if the amalgamation had not taken place. Now, let's talk about carry forward and set off of accumulated loss and unabsorbed depreciation in business reorganization of cooperative banks. So, it is applicable on cooperative banks. Conditions: the predecessor co-cooperative bank has been engaged in the business of banking for 3 or more years and has held at least three-fourths of the book value of fixed assets as on the date of the business reorganization continuously for 2 years prior to the date of business reorganization. The successor cooperative bank holds at least three-fourths of the book value of the fixed assets, continues the business of the predecessor cooperative bank for minimum period of 5 years, and fulfills such other conditions as may be prescribed to ensure the revival of the business of the predecessor cooperative bank. Hope you would understood about all the set off and carry forward losses rules, and it will help you in calculating the total income of the assessee. Thanks. Have a good day.